Alright, so here I'm going to do a little video, an explanation of how I'm up almost $14,000 in the past couple weeks day trading SPY. Um, Long story short, I'm big on trend lines. I'm a big trend trader, as everybody should be trading with trend. I'm big on trend lines. I'm a big Fibonacci retracement trader, and I'm big on channels. So I'm going to break it down as to what I was looking at, this week, and how I've been able to grow my account consistently. So after we bounced off 420 last week, it's just been a series of lower highs, lower highs, lower highs, lower highs. So we'll start just, you know, drawing our lower highs until it stops forming lower highs. So we got lower high here. After this drop, boom, this is the lower high, lower high, lower high, lower high, lower high, lower high. You could say this was kind of a lower high right here. Did a little bit of a break, but then quickly recovered. So that's something that, once this level got taken out, this order block area, I would definitely call order block area, whatever you guys want to call it. This is definitely a key level. Once this, kind of broke down, got back above, broke down, made support quick, broke through the resistance, made support again, boom. So now we got another lower high right here. So my number one thing is you really shouldn't be looking to go short until these kind of levels get taken out. But besides that, let's get into it. So we've been uptrending, 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 uptrending. We kind of finally broke down, and then we shot right back up. So I like to short better than I like to go long. So I did make money on these longs, but what I'm getting at is this, is that I forget what it was the minutes, PMI, yada, yada, yada. This broke out. We just went from 420 all the way back up to 437 in a matter of 4 days. So I'm definitely looking to short this. I'm looking for a good opportunity to short. We finally made the last higher high on Wednesday evening, I guess you could say, because this is Thursday, Friday. And what I like to do is, like I said, I'm a big Fibonacci trader. And I'm going to take everything away again real quick. And if you were to draw, let's just say on this uptrend right here, right? From this low to this high, this thing failed to even, to test the 50% retracement level, which is very, very bullish. The less levels it retraces, the more bullish it is. So this, right off the rip, after this was formed, this lower high, whatever you want to call it, or potentially higher, potentially lower high forming, boom, make support, make support, make support, make support, just keeps going, So if you're a Fibonacci trader, you know that if this thing doesn't even hit 50% retracement and keeps going, this can continue up. So take that away. I'm looking for the trend. I'm kind of trying to find where the trend ends. There's a couple areas you can draw the trend line. You got you got this kind of going right here. So you really don't want to be looking to short until this kind of breaks down. Or until another trend forms and then that level gets taken out. And then you kind of got this going right here. If you notice, you got this right here, a little breakdown, get back above, and then break down. So there's just so many ways to look at this. And I just, I use different time frames, and, higher time frame all the way down to the lower time frame to try and see what's going on. So we got this trend going, this trend's going. Finally, this trend breaks, okay? After a break of this right here. So I'm big into liquidity. I'm big into liquidity grabs and all that good stuff. So I'm always watching for when levels break, what's the reaction around those levels, So this was the last higher high. We finally got above, and then boom, we cracked below it. So once we crack this level, a couple things. Obviously, support, becomes resistance, so you want to watch for this level. There's a couple things about this level that you want to watch. Obviously, this was a previous higher high. Key level right here. How many breaks of structures are we going to get? Is basically what it comes down to as well. You got a break of structure here, a break of structure here, a break of structure here, a break of structure here at this level, another break of structure here, break of structure to the upside, another break of structure. So, eventually it's going to stop doing break of structure. And I'm, because I like to go short, I'm always watching that, and I do go short on all these up days as well. And sometimes I get my ass kicked, but I've been, 85% win rate, so daily win rate. So with that being said, we finally do this last break of structure, and I'm like, all right, enough is enough. When is everybody's thinking, when is this thing going to come down? And because everybody, is thinking, when is this going to keep coming down? Reverse psychology, put to call ratios, ass backwards. This thing just keeps ripping up and keeps ripping up. Why? Because it's the least path of resistance. Nobody's thinking, long after a move like this. Everybody's thinking pull back drop, long, just, screwing shorts over. So boom. Anyway, fast forward, we get over here to Wednesday night. I feel like, I'm definitely been looking to go bearish, and, this is really, it's all algos, all this is doing is just, as the ICT guy says, is this thing is just stop loss hunting until it's no longer stop loss hunting, buy stops, looking for buy stops, and then it's going to go down to the sell side. And it's very true, this thing just kept breaking structure, taking out everybody who was, short, or who's been short, who didn't take profits, or was holding until until the end of October, November. Whoever didn't take profits on their long puts, definitely kind of, got their ass kicked if they held through all this. Unless they're a beast and they just kept holding because, whatever. But anyway, this thing just keeps taking out buy stops until it stops taking out buy stops. And then what is it going to do? It's going to start taking out sell stops, So as soon as this level breaks right here, these are all the levels that I'm looking at. Where is the market going to go to? The market's going to go to here. The market's going to try to go to here. The market's going to try to go down to here. The market's going to try to go down to here. The market's going to try to go down to here to take out all the sell stops, right? And that's exactly what it did, okay? Obviously, from here to here, it's not just going to go straight down. Hopefully it does. But this is the idea, is that once it stops taking out buy stops, it's going to start taking out sell stops. Until when? Until it stops taking out sell stops. And as soon as it reverses, if it does reverse, then it'll go back, to take out all this. Right here, yada yada, buy side, sell side, whatever you want to call it, all right? That's all the market is doing, okay? Is that it's just going to go down until this trend breaks, right here. Until this trend breaks, it's going to keep going down. And when this trend breaks, it'll start to take out these levels. So in a nutshell, that's what the market does. So anyway, Wednesday, I know I talk a lot, but I'm trying to break this down good. From the pre-market high, Wednesday's pre-market high, to the low of day, okay? I am a huge Fibonacci trader, retracement trader, and this is big stuff right here. So the number one thing I do basically when I trade every day is I mark my pre-market highs and my pre-market lows. A lot of people say they don't do that. They look for the SPX, the gaps, yada yada yada. I'm going to tell you right now that the pre-market high, the pre-market low are some of the most relevant levels every day. Don't let people say, oh, the pre-market, it's really got nothing to do with anything. No, the pre-market's got to do with everything, okay? Because it's just a continuation of what's going on, As soon as this trend breaks right here, right? As soon as this trend breaks, it's just downside, Pre-market is relevant, okay? Take this away real quick. So pre-market high, pre-market low, and then the low of day. So once we broke this trend, okay, right here. Once we broke this trend right here, what happened? It went where? My most famous thing that I talk about all the time is, no, it's not going to happen every time. It's probability. It happens most of the time. Is that these are all algorithmic movements, okay? Meaning, yes, there's people like you and I buying and selling, which are irrelevant, okay? It's all algorithms, okay? This goes from here to here, back down to here, right? So, for the bull side, this goes from low to high, trend breaks, it goes right back to the 0.618. So what happens at this area? We all know it is the golden pocket, okay? What happens is that even though it's going to continue to go down later in the day, it's still like a bounce level for the most part, Like you should see some sort of bounce at this area, right? And then once that fails, then you could look to maybe go short. Now this is why I love Fibonacci, and this is why I love everybody who likes to talk crap about Fibonacci and say, oh, it's just irrelevant, it's just coincidence, yada yada. I know it's all coincidence. So let's talk about coincidences, okay? So from the call side, right? If you were bullish on this, you would be looking and waiting for a pullback to this area, 0.618 area, to look for calls, okay? So technically, if you waited for the pullback to this area, this was 0.618. This is, you could have got a quick bounce. At the same time, when this trend ended right here, okay, right here, this trend ends right here in pre-market, which is the most, relevant level that, is relevant as every other level. Pre-market high, pre-market low. This isn't just like made up numbers that are and levels that are just getting hit. This is what's going on. It's a continuation of the night before into the morning, into the open. Everything is relevant. Every single one of these levels is relevant. So pre-market trend line breaks, waterfall, okay? Boom. And let's get really technical now, okay? So from this high to this low, where does it go to? It goes to the 0.618, and then it rejects. And where does it go to? So we know that when this trend breaks, the most likely area that this should go to, is 0.618, which is this area. So anybody who was in short from futures or anything, or I know smart people with big money and institutions, they all know the algorithms play out. People are going short to the 0.618. And then seeing, depending on the reaction, you get nice bullish wicks right here, and you get a breakdown wick, one that takes out this low, and then immediately we get right back in here, okay? And then if you like really wanted to get crazy, you could do from the low to the high, and this thing comes, I don't draw the wick because the wick was an extreme, whatever, but from this low to this high right here, it goes right back down to this 786 and then bounces right up. So it's just another lower high from here. And these are like very big clues. When you see this drop and you see this come down and you see this come back down, but it doesn't come down to take out this level or even test it. This is a continuation kind of pattern to go upside. Until when? For me, until the trend breaks. When does the trend break? The trend breaks right here, number one, okay? But I know, there's a lot going on here, but just, I'll break it down again. From here to here, this is expected to come back to here, okay? And from this high to this low, what is the expected pullback if this is a true downtrend? The expected pullback if this is a true downtrend is 0.618. So it's just like Fibonacci after Fibonacci, golden pocket after golden pocket. Calls break down to 0.618, puts, break down to 0.618, then this goes puts, and then the pullback is to 0.618, and then rejection. So if you just played the fibs without doing anything else, without worrying about what your favorite Discord guy taught you, or your favorite mentor, or you think you know everything and you swallow a little bit of pride, okay? When you use the combination of pre-market highs and pre-market lows and Fibonacci's and channel breaks, I'm big on trend lines and channels, okay? This is basically a buying channel, a buying program. It's a buying until it's not. It's a buying program directly to 0.618, and then it drops. Just like this, after this trend broke right here, was a selling program, a selling channel, until when? Right back to the 0.618. You could do this. You could do whatever the hell you want right here. You could do this. This was a little bit more, straight up, just like down. But long story short, this was a straight downtrend right to 0.618. So Fibonacci is absolutely incredible, dude. And I want to explain to you, I ended up making money on this day, but because I was kind of really bearish, I ended up getting into puts way too early, and I ended up getting like 100 contracts. But because I was so confident in my analysis that this was the beginning of the breakdown, because you have to understand something. Every break of structure was an extreme break of structure. Okay, this break of structure, change of character, whatever you want to call it, this was a big move. This break of structure was a weenie, small break of structure. This was nothing. This was not going up. This was basically liquidity grab. This was just to, take out this right here, boom, boom, bop, and then slap right back down. This was not another continuation, you know, and with all the news that were coming out, boom, bop, you know, whatever. So 0.618 rejection. For all you people and know-it-alls who yada yada know everything, this was a 2,500% day on SPY in puts, and that was a SPY. SPX is probably 4,000%. So what that means is, for all you slow folks, every $100 you put in here turned into $2,500 down here. Not everybody caught this whole piece, obviously not, but I was holding on the entire day for this drop. And once I got past my break even and I got away with profit after being down almost 70%, I walked away for the day green again. So, you know, part of my success and what's been going on for me is that I just been really setting daily goals, reaching them, and trying to walk away as best as I can. I end up leaving lots of money on the table, but that's just the way the game goes. No one's going to catch everything. I need, you know, to work myself. I need to work on myself. You know, definitely holding on to the runners a little bit longer. But because I have this $1,000 to $2,000 daily goal, it's like when I get in those ranges, it's just like walk away basically, because, you know, it's all a probability game. And if you hit your trades, you know, you should walk away, because if you keep going after the day, it's a probability it might not go your way again. You know what I'm saying? So anyway, Fibonacci 0.618. Wednesday into Thursday, hits the 0.618, rejects at the channel break right here. Trend break, dude. This was over, bro. This is just like key entry for puts. I like options more than futures, because options you can, you know, kind of bail yourself out of positions a little bit better than futures. You know, if you caught this whole move on futures, I don't care what you say. This was 3,000% move. It's no 3,000% move on futures, you know, so there's just so much more reward, in my opinion, to options, but you just definitely need to know what you're doing, because it can get really risky and you can get your ass kicked. Moving forward into Friday. Here's Friday. We got, I was looking for the same thing, honestly. I was looking for, you know, now that we were taking out, you know, the lower highs, like we took out this one here, you know, we took out this one here. Even though we got back above, this is now becoming the back end of the move. You know, head and shoulders, whatever you want to call it. This is the front end of the move, climbing up, climbing up. Now this is the back end of the move. So I know very well that every time something goes down, it's going to pop back up. And now we're looking to short. So this was a perfect example and a perfect play. God bless the guys who caught it. That was huge on Wednesday, dude. Like, even for you small account guys, you know, like, this is why trading is so important. I only trade 0-day expiration. I forgot to leave that out, so I have no interest in trading weeklies. I don't care about weeklies. I want to make money. I want to make money now, and I'm well aware of the risk to reward. And the risk to reward, even though trading is tough, there's no comparison to the risk to reward. You know, you risk $100, you can maybe make $2,500. Where, you know, like, there's no comparison. You know, so if you're constantly losing, you need to tighten your belt and figure out what's going on. So back to what I was saying, Thursday into Friday, I was looking for the same thing. I was looking for the last swing high to the last swing low for a 0.618 rejection. I waited yesterday for the market to hit this area, and when we hit this area, the market kept climbing up. I took puts around here, and then I was waiting for the breakdown of this. We got below it, the 0.618. We one candle up and then rejected again. I added more puts, and I could have made a lot more money than I did, but I hit my daily goal of $1,350, and I was like, fuck out of here. I'm out of here. Excuse my language. So this is the beauty of trading. You know, this is the beauty of just trusting the algos. Forget about the news. Forget about everything else. The algos are always playing out. This is nothing but computerized trading, and that's what a lot of us need to understand, you know? It's very simple. When does the trend end? When this is going up, when does the trend? Well, first off, right here, you know, like, look, from this low to this high, it comes right back to the 0.618 in pre-market, and then it keeps shooting up until when? Until it gets back to the other fib levels, and when trend breaks. And then this is the thing that, you know, if you don't even use fibs, okay? This is the low. This is a lower high. This is a lower high. This is a lower high. When this level gets taken out, that means that this is no longer trying to attempt to make lower highs. It's a high probability we are now starting to go short. So once this level gets taken out, change of character, market structure shift, whatever you want to call it, I'm looking to see what happens in the fair value gap areas or Fibonacci pullback. But because this level just got swooped, only one candle retested and then it was over, you know? And this level right here, this level where the waterfall came, okay, is the 0.618 level that people just need to really start understanding is very, very relevant. You know, if you were just to base your trades off of Fibonacci, solely Fibonacci, that doesn't mean that when it hits 0.618, you buy puts or you buy calls. What it means is that when it hits this area, you want to see what happens in this area. Is it breaking down? Is it making support? Maybe it's going to take a couple minutes, but guess what? This couple minutes is a big, big difference of, you know, losing or being a big winner, dude. You know, if you took puts at this level right here, if you saw the big up and then the rejection, dude, this is huge, you know? And then from this swing high right here, you know, from this breakdown level, from here to here, what do you think this level is? It's a fair value gap. Also, you would say is either 50% or 61.8% retracement, you know? So it's like, it's remarkable, dude. Look, it came right back up to the 0.618 and it failed. Okay, it failed, add to puts. That's the name of the game, dude. You know, like it really is. And it's the same thing for calls, but opposite. You know, when it's uptrending, you just want to look for pullback levels, you know? Beautiful, right here. So boom, pre-market from this low to this high. It comes right down to the 0.618 and it goes up. And I short this too. Because I know two things. One, it's going to break down to the 0.618 in two fast candles usually to take out buy stops. And then either it's going to break down from there or it's going to reverse and continue up. So you can even take shorts, get into a good position, and then boom, dump. You know, that's what I do because I like to take shorts. Sometimes I get my ass kicked, but at the end of the day, it doesn't matter because I don't give up after a trade. If I lose one or two trades in a row, it is what it is. It's a numbers game, dude. I close the day green almost every day, you know, and, you know, people say, oh, you should just stop if you lose two trades. No, you shouldn't stop if you lose two trades because if you know how trading works and the probabilities, if you lose two trades in a row, that you're probably not going to lose three in a row. You know what I'm saying? It's like, and you know, there's series of winners and there's series of losers, and it is what it is, you know, but if you're just being stupid, yeah, quit, you know. But if you're sticking to your strategy and your strategy fails, you need to continue. It doesn't matter. You're supposed to fail a couple times, and that's it, man. You know, this is I'm gonna post up some gains and whatnot, but I'm up about $13,800 in the past 2-3 weeks just from being disciplined and realizing that this will never work out until I set goals. I never had goals set, you know, and now I have goals set. I hit them. And dude, I'm almost unstoppable, man. So I'm really looking forward to the future and how this all pans out because I've been at this for a long time and it's definitely starting to pay off. It's just, you know, you have to understand, you know, with options at least, it's not just levels, you know. Levels, you know, you could just buy demand, you know, you could buy support, you know, and you can hold until 3 days. But with options, you have to be a little bit more on edge and you're a little bit more you know, educated because it's a combination of the levels and it's the combination of your theta and the timing. I don't ever look at delta. The only time you have to look at delta and all that stuff, in my opinion, is on like earnings days, you know, because then you realize, you know, you're not getting paid for shit unless a really big move happens. But on a day-to-day basis, 0-day expirations with SPY, 95% of the time, delta's irrelevant. If you get in at good points and it goes your way, you're getting paid. And I'm talking about fast, you know, so I like to do fast trades, and I don't like to hold on to positions all day. It's not my specialty. Breakouts is where all the premium comes, you know. And as many of you know, it's basically I do premium scalping, I guess you could say. I'm big premium scalping. I get in at the beginning of the breaks when nobody wants them, and I sell most of them when everybody wants them, and then I hold runners, and that's the, you know. That's the strategy you want. So I'm going to leave it at that. I'm going to try and touch up this video, but that's about it. All right, there you go.